Hi traders, and welcome to the Technical Analysis Market Watch on Friday the 9th of January. Welcome to 2026, and look, we are seeing a lot of good movement in a lot of the key indices and currencies. So we'll jump straight into the charts and see if we can identify any trades for today or early into next week. All right, so we'll start out here with the Aussie USD, and we can see that even over the Christmas and New Year's period, it's been very, very strong right through. We've got the series of higher highs and higher lows that we're always looking for in terms of positive movement up, and we did eventually get that break above that 67, albeit short, and has pulled back a little bit now, but we can see that we've got a very, very big momentum shift, and the market behaved itself exactly like we would like it to do, hitting the 20 moving average, then making a new high, then coming back and testing it again. Now what we've seen, look, is a break above. We're nearly at the 68-cent market, and it's not a bad move in terms of where it can go. I think that sort of 68, 70 to 80 area is the real target for this. I think we've still got a little bit more upside on it, and it's done all the right things by pulling back to this level. But that 67 level where it is currently, if it hovers around here for a little bit longer and we see a touch of the 20 moving average, which is going to happen relatively shortly if it sits there, because obviously the 20 moving average is going to adjust and move up there slightly, that's a role reversal zone. So we know that we've got resistance at these 2 points here. It's come back and testing that resistance from above, which turns it into support. So it's a great role reversal zone. And we can see a potential movement in the first instance. I'd be going to the previous high, so around that sort of 67.60. But that sort of 68.80 is the ultimate target. I think that would be where I would be looking for the next take profit on a momentum shift up here. I would only be looking for shorts on this one if it happened to break down past the 20 moving average. If it gets down below there, that's a different story altogether. Then we're looking back at around that sort of 66.80 as the target. But for now, I think the strength is with the upside, and we've got a role reversal zone there as well. So that's a pretty good take on it. Don't mind this trade at all. We'll move over to the US dollar CAD now. This is an interesting one as well, because we've seen a few, about a week or two now of very, very strong movement. We bounced off, basically a subdued zone. You can see here that we've got around that sort of 136.50 area. Not the greatest of support. The support was a little bit lower, but it didn't quite reach, and it spun around pretty quickly. And we've seen nothing but green for the best part of 2 weeks, really, since the end of December. We are now at a resistance level, though. There's no worries about that. We know that the 138, sort of 80 to 139 area is a pretty strong resistance point. So ideally, what we're looking for here is a potential pullback, but the fact that we've seen so much strength might indicate that the momentum has shifted on this one in particular. So I think that with that being the case, it would be a reasonable pullback to around that sort of 137.80. That would be my ideal. If it did that, I would be pretty happy with that, because in terms of turning around, as long as the short-term time frames turn around and start heading up, I think we've got a reasonable expectation that we could break through this resistance and then push on to the new and the next level, which is that 130, well, basically 140. 140 is the area that we'd be looking for as the next target. Pretty happy with that one as a target for the CAD, but I would like it to actually pull back first and give us a bit of a pullback zone, because that's ideal. That's what we're always looking for. We don't want it to just go straight up, because then what often goes straight up comes straight down again, and you're not able to trade it as quickly and as efficiently. So we want to see a pullback. We want to see it get there in a timely sort of manner. And with a little bit of luck, that will give us that move. So not bad trading on the CAD there as well. And the dollar index is it's been an interesting one for sure. So this one here, we can see that it's trying to track up higher. It's been going, quite solid actually, just like the CAD has. It's trading above the 50 moving average now and the 20 moving average, which is a really, really good sign for it. That 98, 90 area is roughly where it is right now. Ideally, in a perfect world, I'd want to see just a little bit more in terms of a close. We've closed effectively just above the high of the candle that got reversed here on the 5th of January. It's very, very close now to breaking through. And it's look, ideally, I can see this probably going to around that sort of 100.20 to 100.50 zone as a target for the long. There's plenty of room on the upside, so it's worth being a little bit more patient while it's actually trying to transition into that move, and wait for a little bit more momentum to kick in. What we want to see here is a little bit more momentum. It's just about there, right? So I'm not going to play it down. The daily close is just on that level. if we can get just a little bit higher, that would make me a little bit happier. Even if it pulls back a little bit and then breaks through, that would be just as good as well. We don't mind that pullback, just like we saw on the CAD. With a little bit of good movement, we can see a turnaround around this point here. 20 moving average is about to catch up. If the 20 moving average catches to there, and then we start to see a series of higher highs on the smaller time frames, I'd be looking at probably 99.80 as the first target, and then the 100.50 as the major target for the first move. But all signs are pointing to a pretty good move on the dollar index. I don't mind this one at all. Nothing short of a break below the 20 moving average would make me want to short it right now, which of course, this kind of movement looks like it's going to weaken the euro. So we'll keep an eye on it as well. The next one I want to have a look at is gold. We haven't seen gold for a couple of weeks now, but it's done all the right things. It's pulled back to the 20 moving average, and after creating an all-time high, which we basically thought it was going to do towards the end of last year. So there were no real surprises there, but it did that, pulled back to the 20 moving average, and now it's finding itself trying to rally off this point. So look, it's lifted off the 20. There's no question about that. Whether it's got enough momentum to reach the all-time high, that we'll soon find out. I think it's been a little bit stagnant this week. You can see that we've seen a shift in positive and negative candles, so nothing's really happened that is very exciting. But that said, if we get a close above that sort of 44 or probably 4,500 really, a daily close above there, then I'd be looking to the all-time highs again, around sort of 45.50. That would be the target. If we roll over here, though, that's going to show a sign of potential weakness, and that would mean we'd need to break below the 20 moving average. And if we get that, a break below the 20 moving average, and probably more importantly, a break below this 43.25 area. That would be the area I'd be really looking for a break, because that would give us the lower high, lower low sequence. And then we'd have the high, the low, the lower high, and then of course we'd have a lower low. But there is a fair bit of resistance at this point here. That was formed at around that sort of 42.30 to 42.40 mark. That's going to probably cause some sort of support at that level. And there's also a 50 moving average there if it happens fairly quickly. So there are certainly two ways to look at this one. But ideally, probably the momentum kicking in and pushing higher would be the preferred. If we get that, I would probably look for the all-time highs and maybe see a new one. But I think that, it's pretty good trading on gold. But I think whichever way it swings is the way we'll jump in on it. Now, gold was definitely the story of 2025 in terms of its big move. Silver could be the one that's doing it this year. We'll probably touch on silver next week. We're going to give it another week to settle down. But again, we could see an all-time high very early in the new year, like we thought. I guess we anticipated. Where it can go to, there's really no stopping gold. Like I say, it's just a case of waiting and seeing which way it breaks, and we'll touch base on whichever. And we're happy to trade both directions, really, because I think it's kind of in the middle, in a bit of a middle zone. As long as the technicals stack up, we'll be right to go. All right, and the last one we'll have a look at today is oil. Now, oil has been in the news for all sorts of reasons, probably the wrong reasons, really, in terms of what we're trying to achieve here. But what it did do, though, it found the support where it needed to find the support. There was no question about that. We know that this is a very, very heavily defended level around that sort of $55, $56 a barrel mark. We know that's very, very heavily defended at this point. So really what we're looking for is the bounce that we got. Actually, we talked about it in the streams during the week. So the bounce that we got is really a pretty good positive area up to the 50 moving average now, traveling around that. Look, it's found itself at a place where 58.50 is kind of a bit of a problem for it now. We can see here it had many attempts at breaking it through there. It found support there. It is a mini support zone in itself, but I think 60.50 is the area that you've really got to concentrate on. If we can get past that 60.50 area of a daily close, this area here, then I think we're looking good for around a $62.50 mark move. That would be the ideal scenario, but we still need quite a bit of momentum to do that. But a close above the 60.50, and I'd like it, as long as the momentum is still moving in the smaller time frames, and it's printing higher lows. That gives us a really good opportunity to you get up to around that sort of 62.50. So it's one that you definitely want to be watching the smaller time frames on. But remember that the support at 55 and 56, even if it looks a little bit dire from here, that has been a very, very strong level of support for a long time. So let's keep an eye on it and relax it realistically. If you want to trade it in the shorter term for a small move, I'd be looking at the move up to this resistance point here. This would be the area that I'd be looking for in the first instance, and then a break above there, and that'll be telling us a new story. So that brings us to a close for today's video. Look, 2026 promises to be another year of volatility. 25 was a really good year in terms of technical setups, and I think 26 will be no different. So we're looking forward to bringing these videos to you each week. Have a fantastic weekend. I look forward to seeing you all next week.